month of expansion since August 2022. Now, the dollar basket, which is what I'm going to pull up for you now, has been a strong indicator of how the economy is faring. And if you type US dollar basket on the IG platform or on Pro Real Time or on MT4, you will get this chart, which shows you how this US dollar basket, the US dollar against major currencies, has fared recently. And it has come off its highs ever since the Fed pivot. Yesterday, the dollar basket found a floor just above the 100 mark after 5 straight days of decline. The dollar basket is now trading near 5-month lows. Also checking in on oil prices this morning. Well, oil prices this year has given our clients a lot of entry and exit points because it's been ever so volatile. Oil prices, though, are set to end the year about 10% lower. Now, this is the first annual decline in 2 years. No thanks to geopolitical concerns. There are, of course, 2 wars going on, production cuts, and also global measures to rein in sticky and hot inflation due to wild fluctuations in prices. One of the key things that we're looking out for is demand coming from China. And as of yet, that's been rather weak. All the reopening that or rather traders were looking out for in the beginning of the year has somewhat fallen by the wayside as China has chosen a rather more benign, steady as she goes policy and deciding not to open up as quickly as markets hope, and consumption, therefore, from China has been slower than expected. Just pulling up the US crude chart for you, as you can see there, we see a steep fall since September 2023. And really, that trend, if you look at the channel, has not really changed. It has come back up slightly around the 2023 December midpoint. But if we zoom into this year, it does look rather a solid sort of downward channel. We've seen a bit of a blip, slightly higher since the 12th of December, but it is traversing lower right now and still within this red bar there, the channel between the 2 moving indicators. What is key, however, will be this consumption from China, and many are hoping it will come through in the beginning of next year. Oil prices are also very much linked to what's happening in the Red Sea routes. Keep an eye on that because major firms have stopped using Red Sea routes after Yemen's Houthi militant group began targeting vessels. Last week, the Baker Hughes total oil rig count fell by 3 to 620. The number of rigs in operations decreased to 498 from 501. Why I'm showing this to you is because supply is also a big part of the picture. And we're seeing that OPEC Plus have been crimping supply to try and underpin those prices. At the same time, oil rig counts have fallen, and yet the oil price continues to relatively weaken. So really, this is all about a demand picture, markets waiting on this big demand from China. And we do know that the travel sector has been reopening in a big way. One of the big key stories this year has been gold as well. Just checking in on gold for you. Gold has been a stellar performer, and it continues to be one of those that is talked a lot for 2024 in terms of financial assets that might do very well in 2024. A softer US dollar and Treasury yields amid growing expectations that the Fed will end its monetary policy tightening has helped gold race towards its best year in 3, and also saw prices scale all-time highs above $2,100. Citi expecting gold and silver prices rise by mid-2024 on strong demand for the metals as a hedge against downside risks in developed markets and also property. And one final chart that I'm bringing up for you is iron ore, because iron ore on the commodities front has been the standout performer. It's set to end the year near 2.5-year highs. Now, iron ore, if it does end at 2.5-year highs, will make it one of the best performers in its space. It's benefiting from China's efforts to revive its property sector, and analysts expect more gains in early 2024. China's manufacturing activity probably contracted for the third consecutive month, a Reuters poll showed. This is on Thursday. However, don't forget that many people are, and traders are, waiting on China's central bank to step up in terms of its macroeconomic policy adjustments to support its economy. And this will only stimulate demand for things like iron ore. So a key one to watch in 2024, especially if China steps up its macroeconomic policy adjustments to promote a rebound in prices of iron ore amid signs of rising deflationary measures and pressures. And that's it for now. Before letting you go, let's have a last look at the equity market. Let's have a look at the France 40 first, and we are looking at quite an interesting chart here because, as I mentioned earlier, traversing there. However, the France 40 is up 1/3%, and just looking at the FTSE as well, checking on the FTSE for you, the FTSE also up slightly, up around 1/10%, so not by much. FTSE likely to end the year close to where it started. And last but not least, let's have a look at the Germany 40. Germany 40 there also marginal gains as we speak. And that's it for now. For more analysis and a look to the week ahead, do join me later in the session. We'll be doing that with Anthony Batista from Tasty Live in Chicago. And also at 13:30, we'll have Beat the Street, which gives you an opening view ahead of the Wall Street Open. Otherwise, follow me on Twitter at Angeline Ong. This is IGTV.